Everyone. Right now, there's this massive, kind of quiet battle happening all over the world. And it's not for land or resources. It's for what's inside your wallet. We're talking about a huge shift in money itself, how we use it, and who controls it. It's basically this incredible new tech going head-to-head with the power of the government.
So what's this fight really about? Well, it boils down to two totally different ideas for where we go from here. Think about it. On one hand, you've got this dream of decentralized money that can cross borders, with no one person or government in charge. And on the other hand, a future of super efficient digital cash, yeah, but it's backed and totally controlled by the state. That's the clash, right there. And that's exactly what we're going to break down.
All right, so let's get into it. To really get what's happening, you have to go back to the beginning, to the thing that started this whole fire, cryptocurrency. This new kind of money, it was built on this radical idea of decentralization. No single bank, no company, no government calling the shots. And that one feature, that's what put it on a direct collision course with, well, the entire existing system.
So if you're a government, this new tech is a huge problem. All of a sudden, there's this parallel financial world that's just popped up, and it's playing by a totally different set of rules, or no rules at all. You can imagine the headaches for regulators, right? They're looking at this and seeing a recipe for tax evasion, money laundering, and honestly just huge risks for regular people getting caught up in the hype.
So, faced with this kind of digital Wild West, governments and central banks realized, okay, we can't just watch this happen. The risks were just getting way too big. So they decided it was time to step in, to try and bring some order to the chaos, and, let's be honest, to take back control of the financial system.
So, how are they actually trying to wrangle all this? Well, the answer is, it's complicated. It's different everywhere you look, creating this messy patchwork of rules. Let's check out a few of the big players. First up, the United States. And honestly, the best way to describe the situation there is a messy, confusing turf war. There's no single game plan. Instead, you've got different government agencies basically fighting over who gets to be the crypto cop.
And this is where it gets really chaotic. In one corner, you have the SEC, right? They're saying, hey, most of these crypto tokens are securities, so they're our problem. But in the other corner, you have the CFTC arguing, no, a lot of them are commodities, so they belong to us. And this whole fight is spilling out into these massive lawsuits against the biggest names in the game. We're talking Ripple, Coinbase, and Binance. And as if that's not enough, they're also getting really nervous about stablecoins. The ones tied to the dollar. They're worried these things could become these giant, unregulated shadow banks that could threaten the whole system.
Okay, now let's hop across the pond to the European Union. And it's a totally different story. Compared to the chaos in the US, the EU is going for a much more unified strategy. Their goal? One single, clear rulebook for everybody.
And their big answer is this huge piece of legislation called MiCA. That's MiCA, for markets in crypto assets. It's really the first major crypto law of its kind. And the idea is pretty straightforward. You want to run an exchange in Europe? You want to offer a crypto wallet? You need a license, period. You've got to protect your customers and you've got to follow the anti-money laundering rules. The whole point is to create clear rules of the road so that real innovation can happen without all the chaos.
Now, let's head over to Asia, where, again, things look totally different. There's really no one-size-fits-all approach. But what China's doing, the region's biggest player by far, has sent some serious shockwaves through the entire crypto world.
Yeah, China's approach is probably the most extreme you'll find. On one hand, they've just flat out banned all crypto trading and mining. Just gone. But at the same time, they are in an all-out sprint to build their own version, a state-controlled digital currency. It's this really interesting strategy. Crush the competition, and then replace it with your own.
And that's a perfect segue into the state's big answer to crypto. See, while all this regulation and, well, cracking down is happening, governments are also busy in their labs, building their own thing. And it's called a Central Bank Digital Currency, or a CBDC for short.
So what the heck is a CBDC? Well, the easiest way to think about it is like a digital dollar or a digital euro. But, and this is the most important part, it is nothing like Bitcoin. In fact, it's the polar opposite. It's not decentralized at all. It's issued by the central bank, backed by the government, and, you guessed it, completely centralized and controlled by the state.
And this chart here just lays it all out perfectly. You see, with something like Bitcoin, the issuer is just the network. It's decentralized. With a CBDC, it's the government's central bank. Simple as that. Same goes for control. Decentralized versus centralized. Bitcoin's value? It comes from the market. A CBDC's value? It's backed by the government. But this last one, privacy, this is a biggie. Crypto is often pseudonymous. Your transactions are out there, but they're not automatically tied to your name. With a CBDC, though, privacy could be, well, pretty limited. Every single thing you buy or sell could be tied directly to you.
And don't think for a second this is just some niche experiment. We're talking about more than 100 countries. That's basically the entire global economy. From the US to China to India, pretty much everyone is looking into this, running pilots, or in some cases, already rolling them out. This is a massive global race.
So this brings us to the big trade-off, right? You've got these two super powerful paths for digital money, and both of them have some amazing promises and some really scary risks. It's the classic dilemma, innovation versus control.
Okay, so first, what's the argument for regulating crypto? Well, the people who support it say, look, good rules can protect regular folks from all the scams and fraud out there. It could also make the whole space feel more legit, which would help with mainstream adoption, and it would give businesses clear rules so they can build cool new things without worrying about getting sued.
But there's always a but, right? There's a big risk here. Critics are really worried that if governments are too heavy-handed, they could just smother all the innovation that makes crypto so interesting in the first place. And if the rules are a mess, like they are in the US, it just creates chaos. Not to mention, the cost of following all these rules could totally crush the small startups, leaving only the giant companies in the game.
All right, now let's flip it and look at CBDCs. What's the promise there? Well, the sales pitch is a super efficient financial system. I mean, imagine payments that are instant and practically free, even to someone on the other side of the world. And for governments, it's this incredibly powerful tool. They could, for example, send stimulus money directly into your digital wallet, like instantly. Okay, but the risks? Whoa, the risks are huge, and a lot of people are really worried. The number one concern? Privacy. A CBDC could mean the government can see every single thing you spend money on. And then there's this even scarier idea of programmable money. That's the concept that a government could actually control your money, putting limits on what you can buy or where, or even when you can spend it.
So, where is all this headed? What's the end game in this battle for your wallet? I mean, what's money even going to look like in, say, 10 years?
Well, the future probably isn't going to be one or the other. Most people who study this stuff think we're heading for what they call a dual system. So you'll have a crypto market that's regulated and playing by the rules, living right alongside these government-controlled CBDCs, probably competing with them.
And that's really the key takeaway here. This whole thing, all the regulations, the court cases, the new tech, it all comes down to two totally competing visions for the future. Is money going to be a tool for decentralized freedom, or is it going to be a tool for centralized control?
And that leaves us with the big question, the one that really matters. The technology is already here. The decisions that are being made right now are going to decide the answer to that question for a long, long time. The future of money is literally being written as we speak. And the big question is, will that future empower you, the individual, or the state?